Thank you for joining me. I'm Alex and I would like to have a look at McDonald's. And no, it's not because I'm hungry. So what they do is they have free Wi-Fi and I hear they have food, which is where the hungry part comes in. So right now their price is $207, which gives them a market cap of $157 billion. Dividend yield almost 2.4%, which is certainly not terrible. Payout ratio of 59%, which is certainly not terrible. And revenue $21 billion, which is down slightly, which surprised me. And earnings of $6 billion, which is up fairly significantly, which gives them a PE of 27. Now, 27 is kind of high for my standards, but, certainly very safe business. So 27 is pretty much in the range where I'd consider that. Total assets $33 billion, total liabilities $39 billion, and total stockholders' equity of negative $6.2 billion, which doubled the negative. So it went from over 3.2 to slightly over 6.2. So to sum that all up, obviously, if you're a growth investor, you don't want to invest in a shrinking company. And if you're a dividend investor, I think that you should be considering McDonald's because it's a very safe stock. It's a very safe business model. And you don't expect McDonald's to go out of business anytime soon, especially with all the new stuff they're doing. And the prices also get raised fairly often. So you would think that McDonald's definitely sticks around. So dividend investor, 2.4% dividend yield, not bad. 59% payout ratio, also not bad. And they've been continuously raising their dividend for like 25 years. So obviously for a dividend investor, I think that this is a very safe stock to look into kind of as a base for your portfolio. For a value investor, I think it gets slightly more dicey because the PE is kind of high. The balance sheet looks kind of terrible. Obviously not very terrible, but negative stockholders' equity combined with slightly shrinking revenue, I think is not great, and so I don't think that I would recommend this stock for a value investor right now because there are certainly far better stocks out there right now that you could be investing in rather than buying this stock. So I think value investors probably should look elsewhere. Dividend investors, you can look into the stock. I think due to the very safe business model, it's something that you should be looking into. Wouldn't blame you for passing it up for something with a higher dividend yield though. But 2.4% compared with the current bond yield, certainly not terrible. Obviously, growth investors are out. And so am I. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.